Hi guys. Okay, so today we're going to by the way, congratulations to Arsenal fans. All right, so today we're going to take on another topic of um of the basic foundations of FX. Okay, so we're talking about orders, types of orders. So we already have um and they're just two types of orders in Forex. There are actually three types of orders in Forex. So we have the pending, the limit orders, the stop order, and the immediate execution. All right. So um, limit orders and stop orders are pending orders. So we have pending orders and the ones that are not pending, the ones that are immediate execution. All right. Pending orders simply means future orders, orders you place in time. You get orders you place in time, so that when orders you place in the future, so that when that particular time comes, your order will be activated or you now be let into the trade. Okay, so let's dive deep into this now. What are pending orders? We have different types of pending orders. We have buy stop, sell stop, buy limit, sell limit. I'm going to explain these things now. So let's start from the stop orders. So the stop orders is there are thresholds. Now in stop orders, these are threshold that has to be crossed only once before you are entered into this trade. Stop orders are like a race track, a race line. You get once you cross that race line, you have entered into the race. You're into the race. So if you imagine if you imagine a race line like that line that indicates the race has started. Once you cross it, something like this, you see what is here? You see this line. So once the gun is shot or the whistle is blown, they start running into the race. So once they cross here, they have entered the race. So it's the same thing with stop orders. So they are like a threshold that you set in anticipation that price will keep going in that same direction, right? Either upwards or downwards. All right. So I'll give you an example. So let's say you put a stop order and price is above, the price is somewhere here or above. So you place for a sell stop order, you place the order below current price, so that once price goes below that point, once it crosses it, you are now entered into the trade. Something like this. You get once it crosses it, you're now entered into the trade in anticipation that it will keep selling. That's why they call it a sell stop order. All right. It's kind of like a line where you place, and once price crosses that point, it will keep selling down. All right. So for it looks this way on the chart. This is what it looks like on the chart. So you've placed your sell stop order somewhere here below the chart, and you're anticipating that once price goes below that point, it will keep selling and it will keep going down. So that is kind of like your anticipation. All right. So let's go to the next one, buy stop order, just like sell stop order. Hmm. Hmm. But the difference now, sorry, I'm getting a lot tired. But the difference now is buy stop order is on the opposite direction. Sell stop order is placing the order below price, below current price, while buy stop order is placing the order above current price. So once price crosses that point, you are now entered into the trade in anticipation that market will keep going upwards. All right. So just like what you see here, you get before you are not in the trade, you are not currently in the trade because your threshold has not been crossed. But now you're now in the trade because your threshold have been crossed. So you place an order above market price, expecting price to rise. When threshold is crossed, you are entered into the trade. So that is for buy stop order. So stop orders just need crosses. It needs crosses the once the price crosses the threshold and continues in current direction, that is when you are in profit or you're in the trade. All right. So let's talk about limit orders. So limit orders now, on the other hand, is different. It's just like a boomerang, if you've ever seen a boomerang. So let's read through. Limit orders, a threshold has to be crossed before you are entered into the trade with expectation that it will turn around. So in this limit order now, it means you're setting a limit for the price to go, and that's all it to do, and you're anticipating that that is a limit to go towards that direction and it to start coming back down. All right. So it's just like a boomerang. Boomerang goes to a point, or if you throw a boomerang, you see it go straight to a point and it doesn't cross up after that point. It just reverses back and comes back to you. All right. So that's the situation now. Now, limit orders are like boomerang. Price has to go one way first before it goes the other. So up before down or down before up. So let's talk about sell limit orders. So it's an order you place above the price. When price is going up, you place it above the price in a place where you have calculated by your buyers that market is not going to go beyond that area. So market just has to cross it once and come back and cross it again and turns. So it's kind of like a limited area. You have kind of analyzed to see that this is a limited area price has to get to before it comes back to start coming down. So a lot of people actually still use these limit orders even up to date. All right. So limit orders, these are examples of limit orders. Sell limit orders. So it means it's a limit to get to before it will start selling. So when it gets there, you see the point. So it gets there, activates you. Then when it starts coming back down, then you start making profits because that's a limit order. Same thing with this is a sell limit. So you're expecting it to sell after it has gotten to that point, that limit. You're expecting it to sell. All right. So for a buy limit, you're expecting it to buy after it has come back to that limit. So it means you're putting the price below market. You're putting your order or your threshold below market price. So that once it gets there, that's the limit it will get to selling before it will start buying. So this is a buy limit order. It means that you're expecting price to get to that limit before it will start buying. All right. Just like what you see here. Now, if this is what a buy limit order looks like. You set a buy limit order here, expecting markets to get to that point, then come back. What's this? No, yes, this is a buy limit order. So you set buy limit order here, expecting market to come there before going back up. So market has crossed the threshold all the way from here, right? As it crossed it, then once it starts going back up, you're now in profit. So you only need market to cross it once. And once it crosses it, the more it starts coming back up, you're now in profit. So limit orders, as soon as a threshold is crossed, your trade is activated. As soon as it's crossed like this, you're activated. Then once it starts coming back up, then you're now in profit. Once it happens like this, that it doesn't get to your order, then you're not activated. Your trade is not activated. Okay, so this is what it looks like in the long run. You could take a picture of this so you could keep this in your memory and always remind yourself. So for a buy stop order is placed above the price, and price keeps going up. For a sell stop order placed below price and price keeps going down. For buy limit order placed below price and price then goes up. So it plays below price and price taps it in and goes up, crosses it once and twice and goes up. So sell limit order placed above price, and then price goes down. So I hope this makes sense. So for an immediate execution is when you have market set on price. I'll give you an example. Here, let's say this is where price is. This is the actual place where price is at the moment, right? Because you're seeing it here, that's where price is and it's moving. So once you place a sell here or a buy here, instantly, that's what is called an instant execution, right? Once you place a sell there or a buy, instant sell or instant buy, then okay, give me a minute. I want to do this quick. Okay, so sorry for that delay. I wanted to show you guys something. That's why I delayed. Save. Desktop. Is it desktop? Yeah, desktop. Okay, so this is what it looks like. I wanted to show you what it looks like on the phone. I'm gonna increase this. Yeah, this is what it looks like on the phone. So you have your buy limit, your sell limit, buy stop, sell stop. Uh, this one's buy limit stop. Don't focus on this yet. Don't focus on this yet. So yeah, so this is the market execution I was talking about. So if you're usually when you open a market, it's when you open your app, your MT5 app, it comes in like this first of all. It starts in a market execution first before it goes down to the rest of it. Yeah. Before you can now come back to change it, either you're changing it from market execution to any of the pending orders. This is also a pending order, a buy stop limit, a sell stop limit. You get so there are also pending orders as well, different kinds of pending order. So, but this is the immediate execution. So I hope this makes sense to you so far. So yeah. So if you enjoyed this video, please drop a like and also comment if you have questions and also share the video. Turn up your bell notification so when I drop the next video, you'll be aware or you'll be the first to know that I'm dropping the next video. So this is a series to take beginner traders and their journey to understanding what FX really is. All right. So see you guys in the next video.